One of the things that is going on when we're looking at the PPMs and all the different stuff and trying to put this together, this is actually why I built the models that I have in WaveTech. There is about 60 rules and there's over 600 variables that's looked at every day when those models run. It's very intense, and trying to put together like a step by step is harder. But I think from a trading standpoint, we can use that same technique we were just talking about off the hourly, off a daily to equate over to a weekly, hourly, daily, weekly. You can see this hourly, it was forecasting higher prices, as I told you. And here, that's exactly what's happening, forecasting it right into the final hour. Yeah, so a couple questions before I get in here. How important is the order book? Very for me, especially on day trading. That's going to drive a lot of what I'm doing because I'm looking. And remember, we saw a pretty good rejection, but there's a big offer above. There was like 470 contracts offered, and everybody backed off that. And that was when I normally, if I was actively trading, I'd be hammering those, all the bids coming up into that offer, counting on that offer, maybe even add some to that offer to get even a bigger resistance point up there. So a lot of times those order books are big resistance. If you're on a roll, you'll see these big numbers, they'll just suck them down. There's also flash orders that come in as well. I am known for doing some flash orders. And once in a while you get caught on them, you actually don't really want them. You're just putting in the size, trying to convince the markets. The algos that are driving a lot of trading, they're looking at that order book and trying to figure out, what the imbalances are. It's just like even if you're on Coinbase or some of the crypto platforms, they'll show you that flow, the order flow and the liquidity at different prices. That's basically the same thing. All right, so let's talk about some position trading. So we're going to go over the webs real quick, indicator settings and all that as we'll get into setting up these trades and using a similar technique that what we were doing on the hourly charts. There's some really good patterns here. What do I got? Hourly E-minis. You could use the webs on any length. These patterns are consistent. Today's action, we actually have an outside bar reversal on the up. Yesterday, I talked about this. We got that outside reversal down. We reversed the reverse. Okay, so yesterday's low was 57. Today's low was 54. The high was 33. We did hit 33. If you remember when we were looking at the hourly and the 5-minute chart, we were getting forecast for 44.33, a buck and a half plus on the day. Once again, those Fibonacci targets are darn good. So I'll show you a couple settings here. We're going to build off of this. As far as I'm concerned, I usually leave all the labels on the scale. I can see everything. If I have the webs up there, I can see everything. There's really not much on the settings or the style. Typically what I'll do as well, put the market grid on. I like to use these in combo. Let's talk about some of these patterns. It doesn't matter if we're on the hourly chart or any of these, the patterns are the same no matter what the length of the chart is. So let's take a look at, mentioned earlier, when you're looking at the webs, there's a lot of information here. Linear regressions have been popular around the markets for a long time. The background on this indicator is all I was trying to do is when the markets were getting at extremes, there was no Fibonacci numbers. There was nothing to try to figure out what was likely to happen, whether the market was starting to top out or whatever. I was just looking for stuff, and I kept adding one in, and I ended up adding every value from 2 to 21. If we go back to these settings, you'll see each one of the values. And you can actually, I think you can modify these. So like I said, there's really nothing proprietary other than what I'm about to tell you right now. I want you to be looking at these patterns that are setting up. But those segments I'm talking about, something happens around the webs, and that's why I call them the webs, because they look like spider webs. And that's how they got their name. There's different patterns that form. This is what I call a diamond bottom. All the linear regressions start to cross and then they flow up, and then you get crosses again, and they represent, if you look at the actual values of them, they actually end up identifying right where the resistance is. And sometimes you trade just a touch over them, and then you'll see the crisscrosses and then the rollover. I mentioned to you earlier this veil top. This is where it's like a waterfall. Get formation, and then you get a couple things happening. Everything I do, I've told you this on the channel every day, I look for clustering ideas. What we're seeing here is the crisscrosses tell there's resistance or a consolidation happening. And based on the pattern that comes out of this, these diamond bottoms, you'll see this is another diamond bottom. This is expanding pattern here that's coming out that we had today. This is the reverse I was just talking about, but you can see all the flow of the market was up. Right here is where all the crosses are happening. So you get that, that's where I call the webbing. And it happens typically at or near bottoms. This has been one of the better tools that I've seen for pattern recognition. All the linears are kind of crossing in here. Then you get the flow, and everything you need to know about the market is in these regressions. I think there's some serious math assumptions that can be made. You can see this flow. I was talking about the closer they get together, the stronger they are. Let's come over here. Look at this level here. We got the crosses, but we got into what I call a rope. And you can see, I'll just bring this over, this area right here where my cursor is, all the linear regressions get very tight and very vertical. Thing I always say, never sell a rope. If you were long this, you just want to stay long until you start to see some serious crossovers where the fastest one crosses pretty much all the way through. That's where you get at least a minor top. In this case, it was just a flag that set up a pattern that I've noticed on the hourly chart. You see this, it's a column, but I call them twists, and I'll show you what I mean by that. Get this move up, and then you get this consolidation, but the flow continues, and then you get a little bit of a veil here, and then all of the linears come together, then you get another leg up, and you get kind of one of these veils, and you keep getting this twist. So we actually got another one that basically elongated before it actually went up. So these are typically areas where you're going to get stair steps happen on these big days where the algos are driving everything. And you just get stair steps up, you get the rope in the middle, stair step, amazing strong pattern. And then once you get the rope, you look for this, which is the expansion where you start to get the veil or the pattern around it. That's usually consolidation. And if you apply the PPMs and you're looking at everything, we were looking at the hourly chart earlier, pointing up all the way into the close. So you're just looking at this pattern where it's just, 1, 2, wave 3, here's an ABC, and then wave 5, and then A, B, C, probably D, E, and then rock it up. So the low that we hit each time, we also, just looking at the webs, we got even diamond tops or crossovers at each one of these hesitation points. This is a good lesson here, folks. Elliott, there's a rule of alternation. So this is probably A, B, C, D, E. And then you start the next move up, wave 3. And then you get a simple A, B, C, and then 5. So the rule of alternation is this, and this is being illustrated. We get this sloppy range right here. That is a complex. So what you expect when you get up here, you then get a simple ABC. If you have an ABCDE or an ABCX, ABC pattern where it's very sideways like this, and then you rock it out, you can expect once we hit the peak, in the case of using the webs, we'd look for those crosses and the pattern is set up. There you should see a simple ABC because if the first correction of wave 1 and 2 is complex, then waves at the end of 3, wave 4 will be simple. That's the Elliott rule. The webs are telling us right where the consolidation points are. When you see this stuff happening real time, this is a daily chart. Now we're seeing an ABC. This is all corrective. 1, 2, 3 pattern here, probably X, ABC, getting crossover. So what we'll watch for, if you're watching this coming into next week's action, this is daily S&P, you would look for what this consolidation is going to set up. And it's also setting up at that previous level. I was talking about retesting October highs, put market grid on with the webs. And now we've got a strong combo here. And you can see there's these formation. This here was just a very erratic mess, volatility. And then we got some nice action here. And you can see where everything's rolling right into the market grid. We got an RTX sell right here. Got a couple of days sideways. Let's take off the webs real quick. Just go market grid. And if we go to settings here, so as I go through these, I'll go through all the settings. So right now set for length. So this is looking at 3-day volatility, and you can adjust these. Let's say it's a stock. Let's put Apple up here. You're spiking way out of range. So if I come back over here, it's set on 22. At some stage, it stops changing, taking a 50-day average range, projecting the market grid out. And you'll see it doesn't really, at some stage, it hits max. I think you can go to 200. Average range for 200, then using all the Fibonacci cluster numbers, it really doesn't change a lot. If we go all the way back to 3, check it out. 3 works really good, and you get here's the RTX sell right here, decline. This is Apple. So what you might find is if you're getting too many of those, then you're probably not doing yourself any good if the 3 is not working. 3 is universal, and that's why we chose it.